Good morning. It's Monday morning, October 15th. This is George Kachuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago. Last week, the market slipped into a correction, and we'll get back to that right away. However, this morning, the market's slightly up. Some pretty good news out of China. Their exports increased 9.9%. That was about double what was expected by most economists. Also this morning we had September retail sales coming at 1.1%, which is better than the 0.9% expected by most economists. This morning Citigroup reported earnings as earnings season continues, and Citigroup's up about between 2 and 3% this morning. It's jumping around a bit. Okay, so what's going on in the market? Well, last week we had a few more higher volume selling days, which put the market in a correction. On the NASDAQ market, it crashed through its 50-day moving average on big volume. If you note, every day last week the market rallied in the morning, then pretty much closed at the lows of the days. Even more troubling is good news doesn't seem to inspire the market. Last Friday we had JP Morgan beat estimates, we had Wells Fargo's also beat estimates, however they both closed down on a day. Last Friday morning we had the University of Michigan Consumer Sentiment Survey come in at 83.2, much greater than expected, some of the best levels we've seen since the recession. However, again, the market rallied a little bit on that and then sold off at the end of the day. So we get a lot of selling days going on in the market. Like we see, we have 5 selling days going on in NASDAQ on a higher volume. We see the market rallying in the morning and then closing at the end of the day. So that pretty much tells you that things are not good and good news can inspire the markets. And the S&P 500, however, held up a little bit better. It was able to hold above its 50-day moving average, and it's hovering there this morning, and we're going to see how that holds. So with the market in correction, the question is, what can I do now? Well, it doesn't mean you need to sell every long equity position you have. However, if you do see your position slipping, you should probably start raising some cash so you have fresh cash to deploy with new opportunities or if and when the market turns around. Also, with the other things, you don't want to start going long equities in this environment, trying to pick bottoms. It's a very dangerous game. Again, you want to wait to see till the market turns. Now, let's just say you want to sit on a few of your positions. How can you protect yourself? Well, you can protect yourself, hedge your positions. Let's say you have some long equity positions by buying some inverse ETFs. I like the PSQ, which is a one-time inverse to the NASDAQ 100. Or if you're really more of a risky investor, you can do the SQQQ, which is the 3 times inverse of the NASDAQ 100. Now, these do carry a little bit of a risk. However, what you can do is match the betas, which on your stocks that you're holding in your portfolio, against the percentage of the beta that you're going to hold in these inverse ETFs, and this way you can get yourself sort of like delta neutral. Okay, with the market in correction, be careful. As always, let price and volume be your guide. And this is George Kachuk with Know Your Options Inc., reporting to you from the CME Group trading floor in Chicago. And good luck. Have a good trading day.